I'm Greg Hunter. Welcome to USAWatchdog.com. With us once again, this is a great time to have him on. Peter Schiff. Peter Schiff, thank you for joining us from Connecticut.
My pleasure, Greg. Always like to be on your program.
Well, listen, I have this axiom, this saying that I say, and when you're early, you look wrong. And 3 years ago, you wrote a book called The Real Crash, and people went, real crash. Well, this last week, I think we got the very beginnings of the real crash that's happening with this nice contraction in the first quarter. Is a real crash on its way?
Well, I think it is. And I think the real crash, unfortunately, is going to be a dollar crash rather than maybe a stock market crash. Certainly, it's going to be an economic crash for the average American when their cost of living goes skyrocketing. But, you know, the GDP contraction that the government reported for the first quarter, first of all, they're trying to say it's good news because it was only a contraction of 0.7 and they were looking for 0.8. But in order to get 0.7, the government actually assumed negative inflation. Instead of a deflator, we had an inflator because the government claims the cost of living declined in the first quarter by 0.1%. So nominal GDP actually declined by more than real GDP. I don't believe that for a minute. I think that inflation is a positive number. I think the contraction is much bigger. And in fact, there was an inventory build again. Without that inventory build, I think it would have been a 3% contraction. And all this inventory is going to come back to bite corporate America because their customers are too broke to afford these products. They've got part-time jobs, minimum wage paychecks. They don't have the money. Meanwhile, corporate profits in the first quarter, we also found out on Friday, plunged by 5.9%. That's the biggest drop since the 2008 financial crisis. And the economy is supposedly in good shape. So that is not boding well for the rest of the year.
You're saying that 0.7% would have been 3% contraction, more than triple what they said?
Well, that's if companies didn't invest in more inventory. Companies spent money to build inventory, but I think they're doing this by mistake. I think people believe in the recovery, and so they're gearing up for it. But I think they're preparing for something that's not there. I've been saying it's like a mirage. You know, you're a starving a guy in the desert. You haven't had water in days, and now you see an oasis, and you think there's a big pool of water, and you go towards that oasis, and by the time you get there and you put your hands down, you got a bunch of sand in your mouth because it's your imagination. And I think we're imagining this recovery. People are preparing for it, but when they get there, they're just going to have nothing but sand in their hands. And I think these companies are going to have to stop building inventory, and then the GDP is really going to get killed.
Tell me about the dollar crash. Tell me how that happens. You say we're going to have a dollar crash. How does that happen? How does it unfold, and what does it look like on the street?
Well, the dollar has been going up for the past year and a half because everybody believes that the recovery is real because the Fed keeps pretending it is. And everybody thinks the Fed is going to raise rates because the Fed is talking about when they're going to raise rates. But I don't believe any of that. I think it's a bubble, not a recovery. I think if the Fed raises rates, they'll prick that bubble. I think the air is coming out of it anyway just because of the absence of QE. So I think they're going to have to do another round of QE in order to prevent the bubble from deflating. But when the world figures out the predicament that we're in, that the Fed is just all talk, that this is not a real recovery, that we need a constant supply of QE, that we're so addicted to this that even a smaller dose will send us into withdrawal, then I think the dollar plunges because everybody bought the dollar in anticipation of higher rates. When that's not going to happen, I think the dollar collapses. And then if you're already upset at your rising cost of living, now we have a situation where 25% of Americans are spending half their income on housing. They're spending more of their income on food, on utilities, on insurance. Healthcare costs are skyrocketing. So Americans have no more discretionary income. And when the dollar plunges, that's going to send already rising consumer prices through the roof. And that's the real crisis that Americans are going to have to deal with. The Fed may want to pretend there's no inflation or embrace it as if it's a good thing, but it's going to be the average American's worst nightmare.
Could one of the things that kicked this off is what's going on over in Greece? And last time you were on, you said, listen, I hope they don't get a deal because everybody's going to want a deal. And it looks like your way of thinking is going to come to fruition, that they're going to be hardcore. They're going to come to the end of the road, and somebody's going to go over the cliff here. What do you think about a Greek exit, and could that cause a calamity?
Well, I don't think it's going to cause a calamity because everybody has been expecting Greece to leave for years. So maybe this is going to be a buy the rumor, sell the fact. You know, what normally gets you is the thing that you don't expect. If people expect something for a long time, they're prepared for it. What hurts the markets is when something happens that nobody is prepared for, which I think is going to happen when it's the dollar that crashes. Not the euro. Look, if Greece leaves the eurozone, it's going to be a great example for other people why you shouldn't leave. Because I think it'll be a nightmare. I think if they try to resurrect, the drachma, it's going to be very scary. And the thing that Greece has going for it now, Greek politicians, they campaigned, they were tough. They need to put on a show for the voters. But at the end of the day, they want a villain. They want to be able to blame somebody. And being in the Eurozone, they can blame Brussels, they can blame Germany. But if they leave and then it's a bigger disaster, they've got no one to blame but themselves. There's no more evil villains or scapegoats. So it probably is in everybody's interest for Greece to stay, but it's in nobody's interest to have a significant bailout because of the moral hazard. So I think Greece will have to ultimately concede to the demands of Germany. If they do make the mistake and leave, they may be, the last country to leave. Everybody thinks if Greece leaves, it's going to be a domino effect. Everybody's going to want out. Not when they see how bad it is for Greece. It may be a wake-up call, kind of like a scared straight, and maybe other countries will reform and try to rein in their deficits so that they don't have to follow in Greece's footsteps.
But we're not reining in anything. What we're doing is creating phony numbers. You were out in Zero Hedge last week talking. You were upset about the double seasonally adjusted, economic numbers. That basically you're upset about the phony numbers. We're pretending. Tell me about the phony numbers that they're using.
Well, the San Francisco Fed basically took a look at the horrible numbers for the first quarter, and rather than acknowledging that they reflect the economy, they said, well, the numbers are wrong, the GDP is wrong, they're not seasonally adjusting it enough, so if we double seasonally adjust it, now all of a sudden the economy looks a lot better. So what does that mean? That means all the other first quarters, you were actually much stronger than what the government. I mean, this is the government's way of not wanting to acknowledge, or the Fed's way, reality. I talk about it all the time. I don't think the numbers are accurate either. I think GDP overestimates the strength of the economy because I don't believe the deflator. But when I talk about how I don't think the numbers are right, oh, he's a conspiracy theorist. But all of a sudden the Fed can come out and say the numbers aren't right, and everybody just respects that. This is all about their propaganda effort to try to pretend that what they did worked instead of acknowledging that it was a complete failure.
You talked about QE and Operation Twist, QE1, QE2, QE3, Operation Twist, and soon probably QE4.
Everything that they did, right, to cure the patient, being the U.S. economy, has only made it sicker. We are in worse shape now than we were in 2008. That is the problem. The Federal Reserve caused the problems and then made them worse by not letting the market solve the problems that they created.
I know you've been saying that. That's one of the things that has stuck with me. And you've been saying this on other channel, not just my channel, that they made it worse. How much worse did they make it? And could this make the real crash, as you said, in 2012? And I think that book is probably something people should go back and buy and read. But is it going to make the real crash even worse because they made the situation worse with what they did?
Much, much worse. I mean, if you understand what caused the 2008 financial crisis, it was the easy monetary policies of Alan Greenspan. He lowered interest rates to 1%. He left them there for like a year and a half. And then he was very slow to raise them back up to 5%. And so during those few years of very easy monetary policy, we inflated a housing bubble that created a lot of distortions in the economy and malinvestments and bad debt and excess consumption. And when all of that had to be unwound, we got the financial crisis. Well, the monetary policy of Bernanke and Yellen dwarfs what Alan Greenspan did. I mean, that was child's play compared to what these guys have done. We've had 0% interest rates for 6 years. They haven't even raised them to 0.25. We've had 3 rounds of quantitative easing. We've had Operation Twist. We have a $4.5 trillion balance sheet. This economy is so levered up, so addicted to a level of cheap money that has never before been experienced. So the mistakes that have been made since the financial crisis are on an order of magnitude bigger than the ones that were made before it. And the bust is always proportionate to the boom. And this is a bigger boom, even though it doesn't feel like it is, because sometimes you have so much drugs in your system, even if you take a lot of drugs, maybe you don't feel as high because you build up a tolerance. We had a record dose of this monetary heroin, and we barely had a party. Yeah, the 1% of the 1%, Wall Street partied, but the middle class was left out. At least the middle class felt that they were along for the ride during the last bubble. But this time, there was only enough to benefit, the financiers and and the hedge funds. But this is going to be the biggest hangover yet, the biggest bust yet. I mean, if you thought 2008 was bad, you ain't seen nothing yet. That was the overture to a horrible, horrible opera that's about to unfold. And, as far as how early we are, I mean, the fat lady isn't even in the theater yet. That's how early it is in this tragedy.
Is that what things like Baltimore is really all about? Baltimore, Ferguson. We're talking about this is the outliers of the economy tightening for the people who don't have a lot of money on the bottom. Is that right?
Oh yeah, they're expressing a lot of their frustration and outrage, and this is a community. A lot of people have been coddled with government, and they expect something for nothing. But we have exacerbated this by destroying opportunity. For lots of people, you've got young people that unfortunately have gone to college, majored in nothing, taken on enormous amounts of debt. There's no job opportunities for them, no employment prospects. To the extent that they can get a job, it's a minimum wage job, it's a part-time job. They're better off on welfare or food stamps, living with their parents. We have destroyed this economy. The Federal Reserve has prevented capital investment, innovation, entrepreneurship, economic growth that's real. Instead, we've diverted all these resources to sustaining asset bubbles, to keep the stock market up, the real estate market up, to fund debt for education, housing, health care. We are strangling the real economy, and Main Street can feel it. Even as Wall Street is ignoring the pain on Main Street, you can see this in these protests that are up.
Is the real crash, and I'm coming back to that because I love that title. Even though it's 3 years old, I think that you're early, man, and you're going to be, people are going to look back in this and go, wow, we saw that 3 years before it happened. I'm telling you, that's what I think is going to happen. But is the real crash going to happen this fall?
Well, look. Probably not. It might take longer, but, I've been talking about this a lot longer than 3 years. The reason I called that book The Real Crash is because I wrote a book that came out in 2007 called Crash Proof. And I wanted to remind people that even though in my 2007 book, I did predict the 2008 financial crisis.
You did.
And the collapse in the economy and the drop in the markets, that was not the crash that my book was referring to. That was just going to set into motion the events that would cause the crash. I wanted to remind everybody that back then, the crash that I was really talking about is the one that's about to happen, not the one that already happened. That's why it's the real crash. The one in 2008 was not the real crash. It was what set into motion the events that would cause the real crash, because I said the real crash would be caused by the government's response to the 2008 financial crisis. Everything that they did is what I predicted they would do. I said that they would try to reflate the bubbles, that they would print a bunch of money, they would try to get the stock market to go back up, they would try to get the real estate market to go back up, and that when those new bubbles popped, that's when we were going to have the collapse, right? And that's where we are right now. And I think the Fed knows this. That's why it's been 6 years and rates are still at zero. All they do is talk about raising rates, but they're scared out of the you-know-whats to actually do it, because I think they realize how big a bubble they've blown and that it's too big to pop. And so they're not going to do it, but it's eventually going to do it on its own.
So is QE4 a lock, and is it soon?
Oh, yeah. The minute they did QE3, QE4 was a lock. Because whenever you do a round of quantitative easing, you can't stop without doing it again. Because it's like if you take drugs, if you want to stay high, when the drugs wear off, you need more drugs, right? Otherwise, you go through withdrawal. So that's what they have to do. Whenever you get the economy high on QE, if you take away the QE, you take away the high. That's why we're going back to recession. And to pretend otherwise, that you could have an artificial economy built on asset bubbles and cheap money, that you could take away the cheap money and the recovery is going to endure, is nonsense. My joke was like it's trying to say you can pull a tablecloth out from under a table and expect, or pull a table out from under the cloth and expect the cloth of the dishes to be suspended in midair without the table supporting it. You can't take away what's supporting the tablecloth and expect it to levitate. So it was the Fed that has been propping up this phony economy. But by propping up the phony economy, you prevent a real recovery from ever emerging.
So what should people be buying right now? I mean, is everything on, if the dollar's going to crash, then what you're saying, I've been saying this on my channel, everything's on sale. Water, food, rice, gas, anything you need to fix in your house, gold, silver. I mean, everything is on sale. Is that right?
Well, it's on sale now in that the dollar is overpriced. So you can take your dollars and you can buy some gold now, because you won't be able to afford it later because your dollars won't buy very much gold. They won't buy very much food. They won't buy very much of anything. But right now they'll buy a lot. Not as much as they did, years and years ago, but more than they're going to buy in a few years. So for your investment money, what I do with my clients is we buy assets in countries that aren't as screwed up as the United States, that have more freedom. I want to bet on freedom, right? Limited government is the key to prosperity. So I invest in countries that have less government than we have in America, right? They have lower taxes, fewer regulations, they have more economic freedom, and they have better or less reckless monetary policy, better balances of trade, more fiscally responsible governments. I invest there. I expect those currencies to rise. I expect assets in those countries to rise sharply relative to assets in the United States. So we buy stocks. We collect dividends in foreign currencies. We also recommend that our clients own precious metals. I think gold is going to be a scarce commodity in great demand worldwide when the dollar collapses and people are looking for alternatives. I think that's why the Chinese have been secretly buying up as much gold as they can, because they realize their trillions of U.S. dollars may not be viable reserves for the RMB. They want to have something real, like gold. Before Bretton Woods, the entire world was on the gold standard, and we convinced them to adopt the dollar standard based on the fact that the dollar was as good as gold, because not only was it backed by gold, it was redeemable in gold. But we, reneged on that commitment in 1971, and ever since then, there's been no gold backing any currency. It's just been the dollar. But the dollar's backed by nothing, just political hot air. And when the confidence goes, other countries are going to need something to back up their currency. And I think the only thing that makes sense is to go back to what backed it up before, which is gold. And that's why all these central banks still have gold.
Peter Schiff, you came here and threw fastballs right over the plate, my friend. Peter Schiff, he's the founder of Euro Pacific Capital. Also, Schiff Gold. I'll put some links up after the interview. If you send me a link to your book, The Real Crash, I'll put that up too, because I think everybody should get it. Peter Schiff, thank you for joining us today on USAWatchdog.com.
Thanks for having me on.